Back in the early 1600s, a single enterprise changed the global economy forever. The Dutch East India Company operated a massive global network, sending hundreds of vessels across the oceans to trade in highly valuable commodities like gold, porcelain, spices, and silk. But maintaining a fleet of that scale required an astronomical amount of capital. To finance these high-risk, high-reward expeditions, the company pioneered a revolutionary idea. They turned to ordinary citizens. Individual residents were invited to invest their own money to fund upcoming voyages. In return, they were promised a direct percentage of the ship's eventual profits. This financial strategy worked beautifully. It gave the company the cash flow needed to launch even grander, more lucrative expeditions, which in turn generated massive returns for both the business and its forward-thinking investors. By trading these paper shares in bustling European shipping ports and local coffee houses, the Dutch East India Company inadvertently laid the groundwork for the very first stock market. Fast forward to the present day. The fundamental concept remains the same. Businesses raise capital from willing investors to fuel growth and innovation. Today, however, the equity market has evolved into a massive ecosystem, spawning specialized academic fields, dedicated career paths, and entire 24-hour television networks. Yet, the contemporary stock market is infinitely more intricate than its 17th-century predecessor. To understand how modern corporations and investors navigate this landscape, let's look at a practical example: a rising coffee startup looking to scale. Before the general public can buy a single share, this coffee company must first pitch its business model to major institutional investors. If these high-net-worth entities believe in the company's long-term viability, they will inject the initial capital and sponsor the company's initial public offering, commonly known as an IPO. This pivotal event officially transitions the company onto the public exchange. At this stage, any retail investor or institution that foresees profitability can purchase a stake in the business. When you buy a stock, you are purchasing a fractional ownership slice of that corporation. Your capital directly assists the business in expanding its operations. As the coffee brand opens new locations and boosts its revenue, external observers take notice. Seeing the growth potential, more buyers begin purchasing the stock. This triggers the law of supply and demand. As buyer demand intensifies, the share price climbs. For prospective investors, the entry cost rises. For existing shareholders, the value of their portfolio expands. For the corporation itself, this heightened market enthusiasm provides the necessary funding for new corporate initiatives while simultaneously driving up its total market capitalization. However, the market is a two-way street. If the company's financial health begins to deteriorate, or if it simply fails to meet expectations, the entire process reverses. When investors anticipate a drop in share value, they begin liquidating their positions to lock in gains or mitigate losses before the situation worsens. As a wave of selling hits the market, demand plummets. Consequently, the stock price slides, dragging down the corporation's total market valuation. This downward spiral can inflict severe financial losses on shareholders, a trend that typically persists until the company demonstrates a clear path back to profitability. This constant tug-of-war between supply and demand is shaped by a complex web of internal and external forces. On the operational side, companies face relentless macroeconomic pressures. These include fluctuating raw material costs, rapid technological advancements in manufacturing, and shifting labor expenses. On the structural side, investors closely monitor corporate governance changes, negative media coverage, and broader systemic factors such as evolving regulatory frameworks or international trade policies. Beyond that, market movements are frequently driven by simple liquidity needs. Investors who are perfectly content to cash out their profitable positions to fund personal ventures. All of these overlapping variables create substantial day-to-day market volatility. This noise can distort a company's underlying financial reality, making it look much healthier or far weaker than it actually is. In the world of public equities, perception frequently dictates reality. The mere appearance of losing value can trigger a mass exodus of capital, which ultimately causes a tangible loss in actual value. Ultimately, collective human psychology handles the controls. Investor sentiment has the immense power to catalyze powerful economic expansions or plunge markets into severe financial crises. Because this psychological variable is incredibly difficult to quantify or predict, seasoned financial professionals overwhelmingly advocate for disciplined, long-term investing strategies rather than trying to time the market for quick, short-term profits. To navigate this unpredictability, experts continuously design advanced analytical tools and algorithms, all engineered to gain a slight edge in an inherently volatile system. The modern financial arena is no longer a playground reserved exclusively for institutional giants and the wealthy elite. The internet age has thoroughly democratized investing. Today, everyday retail investors can access the global markets and execute trades using the exact same mechanisms as Wall Street firms. As more people take the time to educate themselves on the inner workings of this multifaceted system, they gain the power to actively trade equities, back the enterprises they truly believe in, and take control of their own financial futures. The journey to financial literacy begins with a single investment. If you are ready to take control of your financial horizon and build a foundation of timeless wealth-building strategies, check out the description below to access a wealth of resources designed to kickstart your investing journey today.